Shares of GM are hitting new highs here as news came out this morning that the shares of GM are hit record highs as the automaker reveals electric van and delves into flying cars. Oh, joy. Flying cars. Kind of sounds scary, doesn't it? But yesterday, I initiated a bull put credit spread for members of 2-Click Profits here in GM. And the reason why was from a technical standpoint. This is a daily chart. I'm looking at the 20-day single moving average and implied volatility below. So the first thing, actually, implied volatility was high in GM, which is good. Therefore, if you're a premium seller, you could collect a higher premium because volatility is higher. And secondly, price was above not only the 50-day moving average, but also the 20-day moving average. But it had 2 down days, 2 red days, as we see here. The third day, we started to bounce. So I used that, and you can actually see we rallied very nicely that day. So I used that 2 down days for high implied volatility to sell puts. So therefore, I can get, I got about 35 cents out of a dollar-wide spread for selling a bull put credit spread. But I also saw large GM call buying. We actually see more GM call buying today as shares up around 6%. So institutional call buying combined with a technical setup equals a beautiful move. So I wanted to also get more exposure to the long side. When you sell a bull put credit spread, you can only make what you sell the spread for. So what I did was I bought a bull call spread as well. We call this a bullish risk reversal. Actually, it's a limited bullish risk reversal because I never sell puts naked. So what I did was I used the bull put credit spread. I still have that on. As you can see, I sold the 44.43 bull put credit spread. Now that spread is basically, 3 cents or so. So I sold it at 35. If I wanted to buy it back now at 3 cents, I could. But I also did a bull call spread. So I used that 35-cent credit via the bull put credit spread to finance a bull call spread. And I paid about 18 cents for the 47.48 bull call spread. I closed it out this morning for around 35 cents, so a nice gain. If shares print 48 or above, my gain is capped because it's only a dollar-wide spread. So I got a fantastic, nearly a 5-to-1 risk versus, basically risk 1 to make 5, risk versus reward. And I actually did that trade for a net credit because I got 35 cents for selling the bull put credit spread. So ideally, a trader could leave the call spread on. I like to take profits on pops. I sell into strength. But a beautiful way to help finance and get upside exposure as well in a stock that you like. You can also buy outright calls. Obviously, the outright calls paid about 114% to where the stock is now. So you can sell bull put credit spreads to help finance long calls, call spreads. You can even do call flies. So many different strategies to take advantage of beautiful technical setups combined with news on the short term. And I'm a short-term trader. I went out to this week, January monthly expiration only. You could go out further, but I want to be right. And when I'm right, I want to win big. I don't want to buy March to me is an eternity away. And you can see the March calls are only up about 46%. I want to get that quick bang and then move on to the next trade. Also, Ford, a nice technical setup as well. Ford breaking out here up just shy of 5%. Beautiful technical breakout. Saw some calls in that name yesterday. Subscribe, like, leave a comment. Beautiful move here in General Motors. As a lot of people don't think of it, but the EV space include GM, include Ford there. Ford just came out with the hybrid F-150 truck. Best-selling pickup truck out there, and it's a very competitive market, so I'm actually looking forward to that. And, of course, the Ford Bronco. Let me know if actually you pick up a new Ford truck or Ford Bronco, how you like it. I will not be getting the Hummer for $120,000, $30,000. But yes, I love my cars.